Hey guys, Rafi here from the Endgame Investor, and I got Phil from the Bitter Draft on Rumble. Link in the description below if you want to check out his channel. He wanted to talk about backwardation today, and it's been a while since I've been in this topic of backwardation. It's one of those topics that seems very, very complicated, but once you sort out the logic of it, it's not that complicated. But it really is, because you have to sort out the logic every time you go back into it, because it's filled with futures market jargon that most people don't understand, and even I don't understand. But then when I bring it back into a logical framework, it does make sense. So we're going to talk about that, because we saw that Shanghai gold was in and still is in backwardation. There's a machlokas here. There's an argument about whether this is true, whether gold is actually in backwardation in the Shanghai market. And some people say that it isn't. I say that it is, but it doesn't really matter that much whether it is or isn't. Technically, we're getting closer and closer to it, and I will show some charts as what proves that. And Phil, how are you doing?
I'm doing well. I actually know nothing about backwardation, so I'm excited to learn. I'm going to be an eager student, write all this down so that I can understand it, and maybe I'll end up passing it along to other people as well.
Okay,
I know
so
it has something to do. I know it has something to do with futures and like the way futures work. But I tried I don't know. I tried to understand it myself, and I didn't quite get very far. So
okay, so every time I try to explain this, I do end up in like blocks of confusion, but then it eventually straightens out. So the way that I can explain just general normal backwardation versus contango in a normal market, spot delivery for any kind of good is cheaper than future delivery for that good, and that is a normal market condition.
so gold,
Which
like gold today, would be worth less than gold tomorrow,
not that it would be worth less.
or cost
It's
less.
that gold today would be cheaper than buying gold today into the future, because you have it's a time value, just like options. Like, but buying an option that's long dated, buying a call option that's long dated for any stock is going to be more expensive for the time that you're buying. Right. So it's not that gold is necessarily cheaper in the present than in the future. It's that when you're buying a future, you're buying the gold now plus the time that you have until delivery to get it delivered to you.
Oh, I see. So it's almost like an options contract.
It is basically an options contract. Futures are options, except options you don't have
Okay.
to take delivery on expiration, whereas futures you do have to take
Okay.
delivery
So
on
that
expiration.
so that price difference is the cost of you canceling last minute.
Something like that, yeah.
Like,
It's also the
I
cost of,
mean, I'm just trying to think like why.
it's
Yeah.
it's really the cost of the guy who has the commodity, the cost of him to store it, right?
Okay. Okay. Got you. Now I'm with you.
Okay. So in a normal market, the spot price would be the cheapest, because then the guy would just deliver to you immediately. And the
Hmm.
futures price way out in the future would be the most expensive, because in the meantime, before the guy delivers it, he has to store it for you. And that takes insurance costs, that takes storage costs, et cetera, et cetera. And he's not getting his income. Um, in
Now,
a
does he have to have the in the warehouse to offer that, or I mean, can he like offer you theoretical gold that's in the ground, because that's really cheap. I mean, theoretical gold in the ground costs nothing
Well,
until you have to dig
he
it up.
could, but then he'd have to deliver it. So if he's offering you theoretical gold in the ground, he's charging you everything it costs you to dig it up and deliver it to him. He can offer you wheat, for example, that he hasn't even grown yet, but that's still going to take time. It's going to take input, and all those costs you're going to have to pay for, plus the time that of all
Because
that,
he's got it.
right?
Okay.
Because he
All
has
right.
all
With
the capital to grow the wheat. He hasn't grown it yet, but he can still sell it to you into the future, assuming that he's going to grow it and deliver it to you then. In a backwardation market, what happens is in a normal backwardation market, let's say wheat is in backwardation, you have the delivery price now for wheat is more expensive than delivering wheat into the future, which means that the market is so desperate for wheat now that sellers are willing to discount the prices, so they don't have to deliver now, so they can save their stockpiles for later. But people who need wheat are willing to pay a premium for wheat now rather than wheat later, because they need to eat something.
So like General Mills, like their stockpiles down, the factory will shut down if they don't get more wheat to make the bread. So
Right.
they're willing to pay the premium to get it like right now, and that forces the hoarders to disgorge immediately
Yes.
or
So,
incentivize it.
yeah,
Doesn't force.
it incentivizes whoever has wheat to give it to sell it now by giving a premium for immediate delivery of whatever commodity it is, and
Okay.
until there is more wheat on the market, that's going to sustain itself. That's going to persist, and that makes sense because when there's a shortage, you want wheat now, and you don't want wheat later. But when there's enough wheat now, you'd rather have wheat later because there's no need for it now. So you may as well pay the premium for getting later delivery and then not having to get it delivered now. And then you have to pay the storage costs. Let somebody else store it.
So it sounds like with gold, and that would mean people are losing. If it goes into backwardation, that means people are getting nervous about state of their investments, state of the economy, state of the currency.
So here's the thing about gold, and the one who knows the most about this, I think, is actually Keith Weiner from Monetary Metals, because Keith Weiner is a doctoral student of Antal Fekete, I think he's Hungarian. He passed away recently. A Hungarian who calls himself Neo-Austrian. I don't know exactly what that means, but he's really the one who popularized this notion of gold backwardation. He makes a really good point, and that is that okay, every other commodity that is consumable, you take wheat, you eat it, you turn it into poop, whatever, it's gone. That's it. There's no more wheat. Same with oil. You burn it, it turns into carbon dioxide and whatever waste product. It's gone. Any consumable commodity, the supply actually does shrink, or the supply of usable commodity shrinks, and you could go into cyclical backwardation. For example, like when you're at the time farthest away from the wheat harvest, you'll have a low. You'll have a low of wheat, and if the harvest is late, then it'll be even more backwardated, and that's cyclical. It happens every year, so you don't have to freak out about, let's say, backwardation in wheat, right? If it happens every year, it's normal. But backwardation in gold should never happen. First of all, the fundamental reason it should never happen is because gold is the money, right? If gold, so
you'd be offering more of itself to get more of it.
That doesn't make sense. So if gold is the money itself should never be in backwardation. But because we're pretending in this futures market that dollars are the money, and we're pricing gold in terms of its industrial price, in terms of like what a gold jeweler would be willing to pay for it, as opposed to what everyone would be willing to pay for it if they needed money, as opposed to like a gold ring for a wedding or something. The special thing with gold is that its supply never goes down, right? Its supply always goes up, however much you're mining per year. The supply can change form. It can change form from monetary supply to jewelry supply to dental supply or whatever. But the supply of gold never goes down. It's never consumed. So you can never really have a shortage of gold. And therefore, you can never really have backwardation based on a shortage of a commodity, because it can't be in a shortage, right? Because it's not destroyed.
Can silver be consumed? Because I know they put it in circuits, but it's still silver. So you could theoretically melt those circuits down.
Yeah,
but I guess people don't.
Silver can be in a shortage. It's just much more difficult because silver has uses that change its chemical form that would make it very difficult to bring back into actual silver. Let's say, like, if you put a whole bunch of silver into solar panels or film or whatever silver is being used for, yeah, it's technically not consumed because it's still here, but you could theoretically say, like, even oil on that standard isn't consumed really, because you could take the carbon dioxide and like
put it back together.
Yeah, but practically it's consumed because it takes a lot of economic effort to change the carbon dioxide back into oil. It takes like 8,000 days or
right. So it would make more sense to dig fresh silver out of the ground than to try and recycle the silver out of circuit boards.
Right. But because gold is so minimally used in industry, or it's used in jewelry, but jewelry isn't really changing its form. It's just changing.
It's still easily converted back into.
Yeah, very easily. You just give the jeweler your necklace or whatever it is, and he'll melt it into bullion in like a minute or 5 minutes or whatever it is. It's not that expensive to do. So there's no reason at all why gold should be in backwardation. So then the question is, why does it happen, and what is it saying? It's saying that that gold is no longer for sale, really. This is a paper from Antal Fekete, and you can see the URL on the top here. ProfessorFekete.com. I think that's how you pronounce it. I'm not sure exactly. So he says here, gold going to permanent backwardation means that gold is no longer for sale at any price, whether it is quoted in dollars, yen, euro, or Swiss francs. The situation is exactly the same as it has been for years. Gold is not for sale at any price quoted in Zimbabwe currency, however high the quote is. To put it differently, all offers to sell gold are being withdrawn, whether it concerns newly mined gold, scrap gold, bullion gold, or coin gold. I dub this event what that has been its long shadow forward for many a year, the last contango in Washington. Yeah.
So is gold not for sale in Shanghai? Is that what the claim is? Like you cannot get gold in Shanghai right now?
Not exactly. He's talking about permanent gold backwardation. It's in a situation now where a lot of sellers are not willing to sell it at the current price, which is why they're not going to accept the premium on current delivery. So there's a situation where the market is getting a little bit more sclerotic in Shanghai, or it seems to be. That doesn't mean that no gold is for sale at that price.
It's just a lot more. It's a lot more expensive,
right?
Hold
on.
Robert Kiyosaki has this great story of when he was in Vietnam. He wanted to buy some gold, and Nixon had just taken everyone off the gold standard. So he had $35 in US cash, and he went to some tobacco. She was like chewing tobacco, this old old lady who's a gold monger selling gold, and he tries to get it for 35, and she spits and she goes spot, and he says no, $35 US dollars, I want US discount, and she goes, spot, and he said that was a life lesson of his. So it sounds like it's even above spot. It's like in Shanghai, at least, there's a much higher premium. So you go to the gold vendor and you try and buy it at spot, and they're like, way above the spit and like way above spot.
Is this like a German pun on spit and spot?
I don't know. What's spit and spot, the German pun?
I don't know. It just sound like you were saying that. Okay.
I'm
going to share something else here. So hold on, we'll go back to Fekete's paper here. So this is his student, Keith Weiner, and you will know Keith Weiner from Monetary Metals. And his business is to he sells gold where you can sell your gold to a jewelry company, and then the jewelry company will pay you interest on that gold, and it saves the jewelry company the money that it would have to spend on futures premiums, where you kind of try to split the price. So you would be earning interest on lending gold to whoever needs it for whatever their industry is. And he defines gold backwardation in terms of the carry price or the decarry price. And the carry price is basically the difference between the spot price and the near futures price. It's how much you would earn by selling a spot contract and buying a futures contract. By selling a futures contract and buying a spot contract to deliver on it. Right. And then you'd earn the interest, which is where the contango comes from. And
so are they, when they pay back interest, they're paying back interest in gold, or are they paying back interest on the dollar value of the gold?
For Keith Weiner, they pay interest in physical gold.
Physical gold. Okay. Yeah. So this would only work, if gold was money, then this wouldn't work, right?
No, it definitely would work.
It could work. Okay.
Yeah, I mean, if gold is money, you still have interest. I mean, that's
right. Yeah.
Yeah. So if you look here, the carry cost versus the decarry costs, when the blue line and the red line are obviously inversely 100% inversely correlated. So the blue line, if it goes below zero, that means the carry profit you would get is zero, which means that the spot price is going to be more expensive than the futures price, because then you'd be losing money by carrying it. So whenever this blue line goes below zero, that's gold backwardation. And we can see that even in New York prices, we were at about a $30 gold carry opportunity back in August, and now we're at close to zero. So people that are arguing that Shanghai is not in gold backwardation because there's no volume in the spot contract, which is true, puts it in some kind of gray zone. I don't really know enough to explain it. But we see here the same sort of numbers that are reflecting themselves here in the New York market, where the carry opportunity, the carry cost, which one is it? For gold is heading towards zero, which means that the spot price is getting closer and closer to the futures price. And if we switch here to the CME data,
how far out is the future in this?
The future just mean what by gold backwardation, he just means the next contract. So it would be December.
Oh, okay, so it's like monthly,
right?
I'm just trying to figure out how far out has the gold been lent out?
How far do they go? They go into the 2030s. If we click here and load all,
you could buy a
2029. Yeah, 2029. There's no volume in these contracts. The farthest out we have volume for is 2028. So that's that we have like two open. You see here the numbers. Two contracts are open for June 2028. That means some retail trader bought two contracts at 22.90.8. You know, expecting to.
Boy, the endgame's gonna be a shock to him.
Yeah. He's not going to get his gold. That's the thing. And that's another thing about gold backwardation. The reason that spot gold gets higher and higher and higher is because fewer and fewer people imagine that they will actually get their gold delivered in the future unless they get it delivered now, which is why the spot goes higher and higher and higher. It's not really people piling into gold. It's people trying to throw out their dollars for whatever they can get for it. Right. So we see here that the settlement price, and to get to this is a little bit important. The settlement versus the last price. The settlement price is where backwardation is measured by, because the settlement price is basically what the CME calculates in the total cumulative closings of contracts, or the cumulative deals, times the volume. It gives an average or something like that. Whereas the last will just give you the last trade made. So if let's say the last price was higher than 1942.7, it wouldn't be backwardation. So we need to, because let's say the last was somebody comes into the market at the last minute and decides to buy spot gold at 1950, right? One contract. Then you could say, okay, 1950 is higher than 1936, gold is in backwardation, but it's not really, because you just had one guy who, for whatever reason, pushed up the last bid to 1950. You have to go by the settlement price, which takes into account all the bids made, right, and puts it and gives an average. So the settlement, the difference between this price here in November and this price here in December is what Keith Weiner, or what his teacher Antal Fakete calls the gold basis. And that's what matters here. So if this is higher, if December is higher than November, gold isn't in backwardation. It's very, very rarely in backwardation. I think the last time was in 2015 or something, and that was at the gold bottom, and it was only in backwardation for a few days. So in an endgame scenario, we should see gold getting into backwardation, and then getting deeper and deeper and deeper into backwardation, where while deliveries are made more and more and more, but still the spot price goes up faster and faster in the nearest future. And that would be permanent gold backwardation.
If I were a nefarious bullion bank, could I offer a bid of $1 to drag down the settlement price?
A bid of $1 to drag down.
Yeah, you said the settlement price is an average of all the bids. So if I was a bullion bank and I didn't want gold to go into backwardation, I could come and say, I'll buy gold for $1.
You could make a bid, but if it's not accepted, the settlement price is all the bids that are accepted.
Oh, they have to be accepted. Okay. Sorry, I thought it was, so it's the average of all the bids that were accepted. Okay, not just the last bid that was accepted. Okay,
right. That when gold goes into backwardation, it forces all other commodities into backwardation, because if gold is in backwardation, that means not that people are bidding on gold, but they're bidding away their dollars. Right, because they don't want the dollars anymore, because that's not the monetary medium anymore. Gold is becoming the monetary medium itself, and when that happens, it forces all other commodities into backwardation by default. And once all commodities are in backwardation, that means the dollar is just being dumped for anything. And then what happens is the endgame scenario where other commodities are only rationally priced in gold terms, and they're no longer rationally priced in dollars because dollars no longer work.
So it'd be like this infinite backwardation almost, I think, graphically, right?
Right.
Yeah, everything always goes asymptotic in these situations.
Right. So that's gold backwardation. And if it is happening in Shanghai gold, that means that there's the beginnings of a yuan crisis where yuan is bidding on gold, or at least in China, at higher rates in spot terms than it is in future terms, which means that they're on the verge of some kind of financial crisis. We saw gold backwardation in December 2008 and November, December 2015. And briefly in March 2020. So it happens during financial crises where it looks like the dollar is becoming stronger and stronger, but gold is becoming even stronger still.
Yeah.
And when that sticks, that'll be the end for the dollar. And I think it'll be during the next financial crisis, but we'll see.
So what's happening on the ground then in China is like people who own like 15 empty houses made out of they call it tofu concrete, I think. It's like this the very shoddy workmanship, they just threw up those houses in the ghost cities. So someone who owns like 15 of those is suddenly like, oh no, nobody's ever going to move into this. I better sell them for whatever I can get and put it into gold right now. And that's what's causing, or just people are rushing into gold, is looking for the safety.
Yeah, again, that would be it. I'm not making any claims as to whether backwardation is actually happening in China. I'm not sure because the number
of opaque market.
Yeah. The numbers are not very reliable, and you could say there's no volume in the Shanghai contract. Maybe I don't really know what's going on in China, but if gold is in backwardation in China, that's what would be happening. Yeah,
I'd be really nervous about fake gold in China. I would have to test the hell out of anything I bought. Sorry, what is contango?
Contango is the opposite. Contango is when the spot price for whatever commodity is cheaper than the price for the commodity in the future, and it goes up and up and up as you get higher and higher into the future.
Okay, so contango is that's the normal situation.
Yeah, when there's no shortage of commodities, then companies can stock their commodities because they don't have to supply the market, and then they can get a premium for taking up that cost for stocking their commodities because they have the capital to do it. Right. If you're a commodity producer, you're going to be able to store that commodity at the cheapest price because you have everything set up to do that specifically.
Gotcha. Okay. I think I get it now. I think I get it. That was a very technical explanation. I hope the viewers also got it. I guess they can post anything in the comments. So let me see if I have any questions on that. So would this be a warning sign, or like once it goes into contango and the dollar, is it like over? It's too late. Like you can't get the gold. Could I not contango once it goes into backwardation? Like could I tell people, oh, this looks like a sign, we're going into backwardation, get your gold now, or is it too late once it's gone into backwardation?
Well, what we know from the 2008 and the 2015 and the 2020 backwardation periods, and they only lasted a few days.
Mm-hmm.
They were all at major bottoms in the gold market, right? 2008 was a major bottom. Late 2015 was a major bottom, and March 2020 was a major bottom. So either the dollar price is going to go back up, and then things will stabilize, or it's not, and you're going to be in permanent backwardation. Because temporary backwardation or backwardation for a few days means that some market players are unwilling to sell gold. It doesn't mean that all of them are. But if what's going to happen at this next financial crisis is the Fed prints so much money that they have to buy the entire bond market, and then you really do have a panic in consumer prices. Let's say you have people just like lining up at supermarkets to buy whatever food is available, mm-hmm. and then what happens is Jamie Dimon and his club, or whoever's in charge of the big bank, is like, well, people are lining up at supermarkets and they can't seem to get supply. So you know what we're going to do? We're going to charge into the gold futures market and get whatever we can get. That's how it happens on the banking side. The bankers aren't, they're not queuing up to supermarkets. They have bigger things to do. They're queuing up at the futures markets to buy as much as they can. That's
that's also when they plow into the miners then, because they're like, well, if the current stocks are gone, we gotta get it out of the ground.
Right. And that's what I think is eventually going to happen to miners. It's not going to be like years and years of mining stocks going higher and higher incrementally. I just think there's going to be a huge panic one day, and then the dollar is just not going to be functional after a few weeks. Let's say a failed treasury auction is what I've been speculating lately. And I mentioned this in the Endgame Investor, like one of the first books that I ever read on dollar crisis is how is it actually going to happen? Well, the treasury is going to pass around its tin cup and try to fill in, let's say, $100 million of whatever 10-year notes, and they're only going to get like 60 million in bids. And then the next day they're going to be like, oh my God, what are we going to do? And then all the bond market's going to go crazy. And then at that point, like the dollar really tanks. And then gold miners having a stock of actual money, like they will be able to continue to operate, whereas other companies, they will be shut down by the force of monetary hurricanes. And at that point, mining stocks should really take off, if not in dollar terms, in real terms, or whatever terms. The whole thing's going to be really chaotic when it happens, but that's what should happen.
So let me ask you this: China, as I understand it, the CCP is sitting on something like 20,000 tons of gold. Could they quickly, peg the yuan to gold and save it not necessarily save other currencies, but could they save their currency at the last minute, like as the dollar's tanking?
You could, but that's really just an academic point. Like, are we going to define gold in terms of yuan, or just throughout the yuan and then call it the shman? Or it doesn't really matter, because once you peg your currency to gold honestly, and if you're going to actually do that, then your entire banking system collapses, which is what's going to happen anyway. And then you have to just restart from.
That is true. The banks would collapse. That is true. I'm always thinking like, oh, well, someone's going to do this, but there's always, it's like a sweater. It's with the thread pulling out. Yeah. You can't save one or the other. Yes. And then all the banks collapse and then people are still just as mad. Yeah.
Yeah.
So let me ask you this. Does the gold, this is the one I've been floating around my mind for a long time. Let's say the CCP says we got 20,000 tons and we repeg the yuan to gold, and they let the banks collapse, but they say, okay, but we're going to make new banks and we'll be fine. Does the gold have to be redeemable, or can they just say it's here? Here's a picture of it. We took a picture of it in the vaults. It's here. Don't worry your pretty little heads over it. We'll take care of it. Use this paper. It's 1 for 1.
I don't know. My inclination is that it would have to be redeemable physically, because in the past, when this has happened, you'd have, let's say, one country collapsing and then repegging to a different currency that a gold exchange still existed with that currency, and then reintroducing that currency into that country and then pegging their currency to that currency. So it was like pieces of the pyramid were falling over, but then you rebuild on the side. You're able to rebuild that portion of the pyramid. But now we're talking about the dollar itself, which is the base of everything.
Underlying, yeah.
Right? When that goes, every other currency goes with it, and then there's no vestige of faith in any other currency that can be used to build up one that collapses in the end game. So my thinking is that it would have to be actually redeemable physically, in a way that the public would actually trust it.
Because that is the last thing any of these psychopaths want to do. Like, they all want us to keep using their notes.
Right. But that's another point I want to make, that it's not that they just want us to use their notes. They want us to use only their notes so that they have the ability to print more of them. Because
right. Yeah, if it is fully backed, then it doesn't matter. Yeah. Then they're just storing our gold for us. They're taking on the fee of that. Yeah, that's true.
Right. So once they make, let's say, in order to restart their currency systems in a credible way that people would accept it, it would have to be 100% convertible 1 for 1 in a way that the public would understand. You just go to a bank and they'll give you the gold and it'll be there. once they do that, there's no advantage of them to have a monopoly on the monetary system anymore, because the only advantage they have on a monopoly to the monetary system, on being able to issue currency, is the ability to inflate it. But you can't inflate it in a situation where people demand the gold itself and rather than the currency. So I'm doubting whether it's even going to be practical to peg a currency to gold, because people would just redeem it anyway, not trusting it, and nobody would want the currency, at least in the initial stages. Yeah,
At least the initial stage, yeah. That's what they do. They build the trust, and then they break the trust.
Yeah.
Let's see. Did I have anything else?
The other topics I have here are banks would not have enough money during hyperinflation. You wanted to talk about that?
Yeah, sure.
The shortage of money during hyperinflation. How does that happen? Rothbard talks about there's paradoxically a shortage of money during a hyperinflation, even though the currency is getting more and more and more worthless. There's more and more of a shortage of it and demand for it.
Yeah. So in the book, when money died, now I want to stress to the viewers, I don't think it's going to happen. Like the reason when money dies happened, the Weimar, was because they were not allowed to default. I think we're just going to default. So it's going to, through a hyperinflation, but it's going to be a lot shorter. It's not going to be this protracted thing where people are like, the wheelbarrow full of money won't be there for very long. I don't think. I guess.
How long were those conditions really in Weimar?
The wheelbarrow money was, I think, like 3 to 6 months in the summer. But this was after like 5 years of constantly devaluing. So it's just the final peak. But I think we're going to get I agree with you. I think we're going to get a much more compressed thing. We're like, oh, the dollar's worthless.
Yeah. Yeah. It's going to be really, to use a German term, it's going to be really blitzkrieg. Yeah. Can you imagine the day after a failed treasury auction? Like, nobody's going to know what the hell to do or how to value anything.
It's going to be crazy. Absolutely crazy. So I would stock up now, everybody. I'm planting. The fartichokes are almost here. I gotta plant them as soon as they get here. I'm paying my son $3 to help me.
No, okay. Wait, for what?
Help me plant the fartichokes, the Jerusalem artichokes.
Oh, the fartichokes, right. Yeah.
I was gonna pay him in God's money, but he wanted to buy a video game, and I gave him a futures. I loaned him $3 because he was $3 short, and so he has to work off the $3 to pay me back. So.
$3. That reminds me of that John Cusack movie. What is it? The Sure Thing. This kid is like running after him all the time for $3.
Yes, you owe me $2. Or yeah,
$2. Okay. Oh, so you know that one.
All right. So what blew my mind in this book was the workers would get paid, and the company would give them a check. It'd be like a daily or even a half-day check, right, for their lunch break. They get a half-day check. They run to the bank to cash it, and the bank, and it's for 500 quadrillion marks. And the bank says, we don't have, the truck with the marks is coming in right now. We don't have it. So you have to wait until this afternoon. But the trouble is, if they wait until the afternoon, then half the value is gone. So they have it's basically a bank run during hyperinflation when these worthless notes they could go out in the street and like pick up, the notes. But the notes were, there are 2 zeros missing. So those notes were completely worthless and not worth going. So there's a bank run during a hyperinflation event. And they got around this. So like a shoe company would write a shoe contract. So let's say you work for a shoemaker, you'd get a certificate for a free pair of shoes with this coupon. And you could go to the grocer and buy potatoes, and you'd hand them that, and the grocer could come to the shoe factory and get a pair of shoes. So they started doing barter, and then they started monetizing whatever little thing was being made. They started monetizing notes on that. So you could think of it like a Chipotle burrito coupon. You could go to the gas station and buy some gas with the Chipotle, and you trade the Chipotle burrito coupon, and then he'd walk over to Chipotle and they'd make the burrito for him.
Right. We're gonna see some really interesting stuff. And maybe I want to end on this in terms of just being a little bit positive, because when this does happen and the dollar is suddenly no longer worth using, then yeah, there's going to be chaos in the streets, really in the urban areas in like Manhattan or Chicago or LA, these kinds of places. But in other places like in rural areas, which also use dollars, there's going to be more creativity like this, like you're mentioning. So we often focus on the mayhem that's going to happen, but there's going to be some interesting stuff that's going to pull people together in ways they didn't even think of before, because in a crisis, that's what people have to do to survive. And
Sure. Yeah.
and besides eating your neighbor, you can really think up some interesting solutions to problems, and it will knit together the strong people. It's like, I can compare it to what I saw in marriages during COVID, right? The weak marriages or the weak families, they really were blasted apart. During COVID,
Be stuck in that room together.
During the lockdowns, yeah, and people who didn't have strong marriages, they really fought, and it sped up the divorce process for couples that I think were going to get divorced anyway. But couples that were really, they had the fundamentals together, the stress really brought them together in ways that they maybe weren't even aware of, or aware of how strong they were. So it's going to be the same thing with human connection, really. The human connections that aren't really there, that are only superficial, that are based on inflation or bank deals between banks that have no respect for each other, or between businesses that are just trying to rip each other off, it's just going to blast them apart. But it'll bring business connections that were really honest and that were really honest and built on trust, to benefit the most amount of people. Those business connections that weren't litigious or anything like that, they will be strengthened. So we'll see all these fake businesses and fake business deals just falling away, and chaos ensuing in their realms. But really, in businesses that were based on honesty, they'll figure out a way to do it.
So one question I have is, well, it's not necessarily a question, it's just a note that I'm thinking. Like in Weimar, like the shoe factories were right there. I mean, they were still making shoes. No one in America, I think, has made a shoe in 50 years. Like anyone who knew how to make a shoe is, probably dead or quite old. So when this blows, like, I don't know what people are going to do. Like, how are we going to make a shoe?
Mm-hmm. How are you going to make a shoe?
Yeah, I mean, because we can't import them from Indonesia or Bangladesh or wherever we're importing them from now, or at least not easily. So if there's, I know how we're going to make a shoe. We're going to figure it out, but it's just going to be like, I would expect, I would seriously expect like shoes made from recycled car tires for a little while, things like that. Until
they do that in Africa, yeah.
Yeah, I mean, I think we'll see that here. What choice is there? What choice will there be?
Yeah, well, how's it going to happen? Well, the people with gold and silver are going to find the people who know how to make shoes. They're going to employ them and buy some factory that has this huge pieces of capital that has to be reworked, and they're going to figure it out.
Yeah, exactly right.
It's going to take some time, but that's the process of decentralization. It's going to be painful. It's going to be terrifying, but in the end, it's going to be really good.
Now, are you personally looking into like, are you going to like set up a shoe factory in Israel or something of the like? Because for me personally, I'm like I just want to sit and like read books and take walks and like think great thoughts. I'm very theoretical. Like I can't see myself yelling at workers who aren't working fast enough or whatever. I don't know.
Well, the way I picture myself, and this could be complete fantasy, I don't know yet. I don't know at all. But I don't have a business mind. I'm not someone who recognizes, I'm not an entrepreneurial brain.
I'm not either. Yeah.
Okay. It's just not what I am. Like, I recognize what's coming. So I'm amassing resources that I know everyone is going to want. And then people will, hopefully people will know that I have those resources. And if you come to me if you have an entrepreneurial mind and you come to me with, I need this gold and silver to do X, Y, Z because the demand is crazy. If I trust you, I'll give you the capital. I'm a capitalist. I'm not an entrepreneur. It's different.
Yeah. Yeah. Well, we serve an important function because a lot of people aren't seeing like the capitalism, or the people aren't seeing the shift in capital that's about to occur.
Yeah, it's coming, and it's I think it's going to hit sometime around February, between February and April.
Yeah. Can you believe it? Are you
are you only on that timeline because I am, or do you see it separately? Do you see other reasons besides
I
what I
don't see. So what I do is I listen to everybody, and then I try and contradict you mostly,
Okay.
which is what I was doing from the beginning, or contradict each other. See who's like, what's the argument for, what's the argument against, and I haven't found anything that would extend the timeline. So, but maybe you're missing something. Maybe I'm missing something.
Yeah.
This is what I told people when I interview for jobs. I said, if you want, my day job is I'm a computer programmer. So I said, if you want groundbreaking code that no one's ever thought of before, that's really going to innovate, like I'm probably not your guy. But if you want somebody who can Google the groundbreaking code, understand what it says, and apply it, I can do it, and I can do it a lot cheaper than the first guy.
Okay. That's what you actually do?
That is my spot in life, huh?
That's what you do?
That's what I do. Yeah, I Google things and integrate. I integrate code that other people have written a lot more cheaply than it would cost to hire the genius.
You're like AI, but human.
Yes, I might get outsourced. I don't know.
Oh man.
Oh, so one final thing was on the Weimar, the book When Money Dies. There's a throwaway line. I talked about this before off camera. There's a throwaway line that Adam Ferguson says where people sold their silver for a sack of potatoes. The family silver. People sold the family silver for a sack of potatoes, and I think that was just him. He was thinking, he's not an economist. He's not an Austrian economist. He's not, he wasn't a subscriber to the Endgame Investor. So I think he was thinking like, people would have to sell their valuables for a sack of potatoes. So they sell the grand piano for a sack of potatoes. They sell their family jewels for a sack of potatoes. Oh, they'd have to sell their family silver for a sack of potatoes. But your argument, and I think you are correct, is that the family silver would actually be worth like ungodly amounts of potatoes. You should be able to show up with a knife, a sterling silver knife, and get 2 sacks of potatoes or something like that.
Yeah.
So I think the author I wouldn't say he lied, but I think he, came up with a hypothetical in his head that
I think he was just misusing a colloquialism.
Yeah, exactly. I think he was just misusing a colloquialism.
Okay.
However, I was thinking if this actually did happen, if this happened in his primary sources and he just didn't quote it, what I was thinking was that if there's let's say, you're in a city like Berlin and there's a transportation breakdown and people are really hungry, then I could see the real price of potatoes in that moment, elevating to where, people will sell the entire silver set to get their hands on some food.
Yeah. Look, it could be that in certain cases the market was so disjointed that the guy was so hungry and there were potatoes here and he has silver, and then that transaction just happened. But in a more organized market, there would be just a better price for silver versus potatoes. And I looked at the Weimar charts, not to say that those are accurate, but what they say is that there was a constant 14-to-1 gold to silver ratio throughout the hyperinflation.
I saw your video on that. Yes.
Yeah.
So maybe potatoes just went way up in real terms, or maybe this was this wasn't quite a true statement of a real event that occurred. So.
Mm-hmm. Well, we'll see what happens. I still think silver is going to be a better investment than gold in terms of use during the end game. The way I put it is that silver is for use during the end game and gold is for use after it.
I agree. So let me ask you this: if you're gonna buy a house from somebody, do you offer just silver, just gold, a little mix of both?
Well, we'll see. During the end game, if I see anything close to a 15-to-1 ratio, I'm going to use silver because we know what the floor is going to be. We know what the ceiling was, the floor of the ceiling, whatever it is, the maximum for silver is going to be. It's going to be 15-to-1. You're not going to get much lower than that. And if you're going to wait for lower than that, you're an idiot. Yeah. So just you wait for, you can wait for 31. You don't have to go to 15. 31 is good enough.
Whatever. If you buy a house for a bar of silver, go for it.
Yeah. When you see that price, just like look at the classifieds, look at what houses are for sale, and just like buy a bunch of them. That's all.
I wonder if you're gonna have to convert it. I bet you're gonna have to convert it to shekels or dollars. I mean, it's gonna be the wheelbarrow of shekels. I think you'll have to sit down with the. Well, at least in America, I'm pretty sure the state, some of the states have laws where like you must convert it to whatever the currency is first. But it's simple. You sit down with the real estate agent. He buys the silver from you with the wheelbarrow of cash. You buy the house. Yeah, you take the cash, buy the house, and then he sells the silver back for the wheelbarrow of cash. So, and then he takes, a little cut or whatever. And then you wait a week and you pay the 30% tax with the money you pick up off the street.
Right. Okay. It sounds like a plan. All right.
All right. We can leave it here, Rafi.
Okay. Have a good, it's good talking to you. Have a good week. What day is it? Sunday? Yeah, it's Sunday.
Yes, absolutely. We'll see you next week for a live stream.
Have a good week, man.
You too.
Bye.